It's good to see you here in Florida as well, Howard. Thank you.
Thank you. It's nice to be here.
Your new book, Mastering the Market Cycle, How to Get the Odds on Your Side. And I think it's important now because yesterday the Fed made this huge policy U-turn. Is the Fed on our side? Has the Fed's policy shift gotten the odds on investors' side, so to speak?
Arguably, it has improved the odds for the near term, possibly at the expense of the long term. The Fed sometimes appears to have taken on the job of keeping the markets going, but to do that, you have to do things you wouldn't otherwise do, which may be not so good for the long term.
Do you think the Fed is trying to keep the market going?
Well, they're certainly trying to keep business on a good keel. And they're trying to, they were interested in having higher interest rates and a slimmer balance sheet. But when that appeared to threaten the vitality of business, they retreated from that.
Bad move?
He's smarter than I am. I'm not going to tell him.
I don't know about that. You are the billionaire,
I'm not going to tell him what he should have done.
But let me ask it a different way. For most of last year, call it 10 months, maybe 11 months,
yes,
we were optimistic. In December, the world was ending.
Right.
Stocks crashed. Everything was terrible. Now we're having this great January again.
Right.
What is happening? What has changed?
Well, Brian, it's really dangerous to look for rationality in the market. So much of what happens is psychology and unpredictable and inexplicable. I wrote a memo in February of 16, when the market got off to such a terrible start, called On the Couch, because I think once in a while the market needs a trip to the shrink. And I said that in the real world, things fluctuate between pretty good and not so hot, but in the market, from flawless to hopeless. And in the fourth quarter, the people who were unworried for the first 9 months of 18 became petrified. And now they're unworried again.
Okay, I know you like to study psychology too. So, when we talk about market cycles, the basis of your book, why do smart, educated, rational, otherwise logical humans make such dumb investing decisions sometimes and sell at the bottom?
Well, how many people really are in control of their emotions rather than vice versa? That's really the question. People get excited at the top and buy when prices are at their highest, and they get depressed and sell at the bottom when prices are at their lowest. And they just shouldn't. And
you buy from them?
Well, we try. We try. I mean, well, if you think about it, the person with the average insight and the average emotion participates in the swings of the market. Only if you are different can you profit from the swings of the market.
We just talked about Apple. I think their old motto was think different. Okay, how about this? The market cycle. I will venture to guess, Howard, having perused the book and seen you speak, talked to Scott, et cetera, is we're closer to the end of the cycle than the beginning. Fair statement. Okay,
yes.
So is there any asset class or anything right now that looks still underpriced to you, a good value right now?
Well, what I tend to like are the things that have done worst. And so what stands out there for me is the emerging markets. And they have been beat up. And if this is not the time, then the time is coming.
Emerging equity or emerging credit?
Both. We're active in both, and we're generally constructive on both.
Anything you see right now that is spectacularly overpriced? Avoid at all cost.
We don't have extremes of optimism and euphoria like that. And the actions of December and the fourth quarter did bring a lot of things into line. I don't see anything which is in a really egregious bubble.
Is the Fed going to bring us into another bubble? If they cut rates this year, Howard?
Cut rates?
They could.
Well, it's kind of like you go to a doctor and he pulls out a really big hypodermic and you say, I must have a problem. If the Fed starts cutting rates, then obviously they think we have a big problem, because through their actions to date, they have indicated that rates should be higher than they are.
And suddenly made this wild shift yesterday.
Right. And so, if they were to cut rates, that would be an extreme action. I'd be surprised. But
would you be worried then?
Well, you'd have to. You know, I wrote in I guess it was about 20 years ago. When the Fed cut by, oh no, it must have been in 07, maybe in September 07, and the Fed cut by a half, and my reaction was, what does Greenspan know that we don't know? And if they cut this year, that would be my reaction.